Welcome back to News Nexus, your trusted source for deep dives into global events, technology, finance, and the future of our world. Today, we're exploring a question that has sparked debates in boardrooms, tech summits, and even around family dinner tables. Is Bitcoin the end of traditional money? And more importantly, what does the future of global finance look like? Stay tuned. This conversation could reshape the way you think about money, investments, and the global economy. Let's begin by tracing the evolution of money itself. Human civilization has always needed a way to exchange value. Thousands of years ago, we relied on barter systems, trading cattle, crops, and handmade goods. But the problem with barter was clear: it wasn't scalable. What if you needed shoes, but the cobbler didn't want your wheat? To solve this, societies turned to precious metals like gold and silver, rare, durable, and easy to transport. But carrying gold wasn't exactly practical, especially as trade expanded across empires. That's when paper money backed by gold reserves was introduced, and later fiat money, currency not backed by physical commodities but by government decree and collective trust. And now, in the digital age, we find ourselves witnessing the birth of a new chapter: cryptocurrencies, with Bitcoin leading the charge. But why Bitcoin, and why now? Bitcoin's story begins in 2008, during the height of the global financial crisis, a moment that shattered trust in banks, investment houses, and government-backed economic systems. Millions lost jobs, homes, and faith in the financial order. Out of this chaos, an anonymous figure, known only as Satoshi Nakamoto, published a white paper titled "Bitcoin, a peer-to-peer electronic cash system." Bitcoin wasn't designed to be just another currency. It was a technological revolution. Unlike dollars or euros, Bitcoin isn't printed. It's mined through solving complex mathematical puzzles in a process called proof of work. Its supply is finite. Only 21 million bitcoins will ever exist. No central bank, no government intervention, only code and consensus. This design struck a chord. For some, Bitcoin represented financial freedom and sovereignty. For others, it was a hedge against inflation and currency devaluation. But Bitcoin was just the beginning. As interest surged, the crypto ecosystem rapidly expanded. Ethereum emerged, introducing smart contracts, self-executing programs that automatically enforce agreements. Stablecoins entered the market, offering the stability of the US dollar but the speed and flexibility of cryptocurrency transactions. And decentralized finance platforms, or DeFi, started offering loans, interest-earning opportunities, and asset exchanges without the need for traditional banks. Even central banks, once skeptical, began paying attention. Countries like China introduced Central Bank Digital Currencies, or CBDCs, such as the digital yuan. The European Union and the United States are developing similar initiatives. Governments recognize that digital currency isn't a passing trend. It's a force they must regulate and, in some cases, embrace. But does all this mean Bitcoin will replace traditional money? Let's examine the pros and cons. On the positive side, Bitcoin is decentralized. No single entity controls it, making it resistant to censorship and immune to government overprinting. Its fixed supply protects against inflation, potentially preserving long-term value better than fiat currencies. Bitcoin is borderless, allowing instant, low-cost transactions across the globe without needing a bank. Its foundation, blockchain technology, is transparent, secure, and tamper-resistant. But Bitcoin has its drawbacks. The most significant is its volatility. Prices can fluctuate thousands of dollars in a single day, making it unsuitable for everyday use. Adoption remains limited, with only a fraction of businesses accepting Bitcoin as payment. Regulatory uncertainty continues to create barriers for mainstream acceptance, as governments struggle to develop clear legal frameworks. And finally, Bitcoin mining consumes vast amounts of electricity, raising serious environmental concerns. So where does this leave traditional money? Despite Bitcoin's growth, fiat currencies still dominate global commerce. Backed by legal systems, financial institutions, and decades of public trust, fiat money remains deeply embedded in our daily lives. But that trust is no longer unconditional. Inflation, political instability, and financial mismanagement have pushed people to seek alternatives, and Bitcoin has positioned itself as a digital safe haven. Governments are responding. Regulatory bodies around the world are drafting new laws to govern crypto exchanges, tax policies, anti-money laundering measures, and digital wallets. Central banks are racing to issue their own digital currencies to stay relevant in a cashless and increasingly decentralized world. So, what does the future of global finance look like? Some experts believe Bitcoin will never replace traditional money, but will instead evolve into a digital version of gold, a long-term store of value rather than a day-to-day currency. Others predict a hybrid future where fiat money, cryptocurrencies, and central bank digital currencies coexist, each fulfilling different roles in the global economy. Cryptocurrencies also offer the potential to address financial exclusion. Over 1 billion people worldwide remain unbanked, but many own smartphones. Cryptocurrencies could offer them access to global financial services without needing a traditional bank account. And let's not forget decentralized finance, or DeFi, which could disrupt some of the roles banks have held for centuries. Imagine a world where you can earn interest, take out loans, and trade assets, all without a financial institution powered entirely by algorithms and smart contracts. Of course, with innovation comes risk. Digital wallets can be hacked, private keys can be lost, and the lack of regulation can open doors to fraud. But the opportunities are too significant to ignore. So, is Bitcoin the end of traditional money? Not quite, but it is the beginning of a profound transformation. Bitcoin is forcing governments, banks, and businesses to rethink the very nature of money. It's challenging all of us to imagine a world beyond borders, banknotes, and even banks. The most likely scenario isn't a complete replacement, but a financial ecosystem where Bitcoin, fiat currencies, and digital government-backed currencies coexist and complement each other. The global financial system is evolving, and the decisions we make today will shape the economy for generations to come. So, what do you think? Would you trust your savings to Bitcoin, or do you still prefer the safety and familiarity of traditional banks? Let me know your thoughts in the comments below. If you found this discussion valuable, don't forget to like this video, subscribe to News Nexus, and hit the bell icon so you never miss a deep dive into the future of money and beyond. Thanks for watching, and I'll see you in the next video.